assessment and audit. That's it. 19, assessment and audit. Look into it in page number 107. We have various interest under GST. All these interest provisions I have compiled into one place. First, section 50, subsection 1. Whenever there is a delay in payment of tax, it can be non-payment of tax or it can be short payment of tax, then that person is liable to pay interest at the rate of 18% per annum from the first date after due date till the date of payment and include both the days. So first date after due date and the date of payment, both days should be included. Okay. For example, July month there is a liability and the GSTR 3B due date of July is 20th of August. So then from 21st of August till the date of payment, say the payment is made on 31st of October. So in August 11 days from 21st of August, so August 11 days, and in October 31 days, so therefore 42 August 11 days in August, September 30 days, he is paying in October 31st, so therefore 31 days in October, so therefore 72 days. For 72 days interest is payable at the rate of 18% per annum. Okay, simple interest only. And whenever there is wrong availment of ITC and utilization, only when there is utilization of that wrong availed ITC, this interest will come because there is a short payment. For example, a particular month, the liability is 12 lakhs and the ITC is 18 lakhs. The wrongly availed ITC is 4 lakhs. Now that 4 lakhs wrongly availed ITC has been reversed. Now there is no short payment. Why there is no short payment? For that month liability is only 12 lakhs. 18 lakhs is the ITC. 18 lakhs, only 4 lakhs is wrongly availed, but correctly availed is 14 lakhs, which means we have not utilized it. So still there is ITC which is not utilized, wrongly availed, and we reverse. So interest is not payable. For the same month, if the liability is 12 lakhs and the ITC, correct ITC is 10 lakhs, the correct ITC is 10 lakhs, but we availed 4 lakhs extra as wrong ITC, 14 lakhs. Now in this case, definitely we would have used the 2 lakhs for payment of our liability. So now, what is the short payment of tax? 2 lakhs. Had the ITC been 10 lakhs, we would have paid 2 lakhs. Now, we took the ITC of 14 lakhs, so we will not pay any tax, which means there is a short payment of 2 lakhs. On the 2 lakhs only, ITC utilized. So on the 2 lakhs only, interest will be computed at the rate of 18% from the date, okay, first date after the due date. Or first date after the date on which GSTR 3B has been furnished. So the first date after date of availment, that is whenever you furnish the GSTR 3B, first date after that date till the date of reversal, you need to pay that interest. Okay, so that's an important area. Remember, for wrong availment of ITC there is no interest. Only for wrong utilization of ITC the interest payments will arise. So how to identify? You need to know the ITC, wrong ITC and correct ITC of that month. So you will know whether ITC has been utilized or not. Okay. So that is this. And then section 50 subsection 2. 50 subsection 2, undue or excess availment of ITC or reduction in liability. But this section 50, actually this is section 50 subsection 3, but this is not applicable at present because this section 50 subsection 3 connects to section 42 subsection 10 and 43 subsection 10. This 42 subsection 10 and 43 subsection 10 never saw the daylight. It is related to GSTR 2, GSTR 3 and communication of the discrepancies. So this is never seen the daylight. So due to that reason, for those two sections only it is applicable. As those two sections are not made effective, due to that reason, this interest under section 50 subsection 3, 24% per annum is not applicable. However, I have come across few cases where some people told me that notices has containing interest at the rate of 24% per annum, but it is legally invalid. So interest is payable only 18% per annum in that case. So they can definitely fight for 18% interest. Okay. Then section 60. Section 60 is related to assessment, provisional assessment. Say we are going for provisional assessment. We make an application for provisional assessment and we paid a provisional tax of 10 lakhs. Say final assessment tax is 14 lakhs. Now that 4 lakhs we need to pay. So when we are required to pay that 4 lakhs, then that 4 lakhs, whether we need to pay interest? Yes. We need to pay interest on that 4 lakhs. So provisionally you paid 10 lakhs. The final assessment tax is 14 lakhs. So on that 4 lakhs we need to pay interest. Interest at the rate of 18% per annum from the first date after due date of the month for which we resorted for provisional assessment. So for one particular month, actually this 4 lakhs pertaining to that month for which we resorted for provisional assessment, what is the due date of that month we need to find. Say for July 2018 we resorted for provisional assessment. So therefore July 2018, what is the due date? Say 20th of August. Now 21st August till the date the final assessment is completed and you pay the differential amount, you need to pay the interest at the rate of 18% per annum. Okay, from the first date after due date of the month for which tax is provisionally assessed till the date of payment. In all these cases, when I say due date, suppose if the due date is extended, so then we need to count interest from the extended due date. Okay, then section 16 talks about non-payment of tax along with the value to the supplier within 180 days from the date of invoice. So supplier is giving an invoice to the recipient and recipient should make payment to the supplier. Payment includes both value and tax within 180 days from the date of invoice. Otherwise, so much of the ITC availed by the recipient needs to be reversed, okay, along with interest. What is the rate of interest? 18% per annum. From when? From the first date after availment of ITC till the date of reversal of ITC, because ITC to be reversed, so interest is payable. Okay sir, thereafter when the payment is made, can this interest be taken as credit? No, this cannot be taken as credit. That is this. And section 17 is in case of rule 42 and rule 43. Rule 42 is that we need to compare D1 and D2. Whatever is the ITC, common ITC attributable to exempted supply, common ITC attributable to non-business purpose, D1 and D2 we will reverse on a monthly basis. Again we need to compare it with D1 and D2 which is computed on a yearly basis. Suppose whatever we have reversed on a monthly basis total is less than whatever we need to reverse on annual basis, the differential amount we need to pay. So that computation will be done by the end of the year only. So interest will be computed from the 1st April of the succeeding financial year, because up the end of the year only we can do the computation. So from 1st April of the succeeding financial year till the date you pay the differential amount of ITC reversal, so you need to compute the interest. Then rule 43, capital goods. For capital goods also the same, that is whenever we do the reversal, first we will avail the ITC with respect to common capital goods and we need to reverse it over a period of 60 months. So reversal of ITC, monthly ITC into exempted turnover divided by total turnover. How much ever ITC we reverse pertain to the ITC which initially we took. So now we need to pay interest at the rate of 18% per annum from the first date after availment of ITC till the date of reversal. What is the meaning of availment of ITC? Here availment of ITC will be taken as the GSTR 3B date, because GSTR 3B, only when you file GSTR 3B, so you can take the ITC. Otherwise, ITC taken in your books is not relevant at all to anyone. Okay. Then section 56, we have interest on account of refund. So whenever we need to get refund from the department, so in that case, first we will make an application for refund and within 60 days they need to sanction the refund. Otherwise from 61st day, interest will be payable at the rate of 6% till the date of refund. Whereas if the refund is sanctioned by adjudicating authority or appellate authority, okay, by the order of adjudicating authority or appellate authority, then interest will be at the rate of 9% per annum. Okay, interest will be at the rate of 9% per annum, 61st day from the date of receipt of application till the date of refund. Okay, so whenever the refund arises on account of the order of adjudicating authority or appellate authority, like that when it is given, don't take 6%, take 9% per annum. Okay, but all other cases you take 6% only as the refund interest. And due date refers to the date of filing GSTR 3B. Usually when nothing is given, you take 20th of the month following every month. Specifically if they give some other data, you take it accordingly. Okay, and whenever there is a delay in GSTR 3B, filing GSTR 3B, there is a delay in payment of tax also. Whether that delay in payment of tax, whether on gross liability we need to compute interest or on net liability we need to compute interest. Only on net liability, that is whatever amount that you paid using your cash ledger, on that only you need to pay interest. Okay, and this is on account of delay in filing GSTR 3B. Done. So delay in filing 3B leads to delay in payment of tax. For that the interest will be computed on the net liability, but it is a retrospective amendment from 1/7/2017, which means if a person has already paid the interest on gross liability, they can get the refund. Okay, So these are the various interest provisions under GSTR.